If you own a rental property in Australia, the tax office may already be looking at your return. Because when the ATO ran a random inquiry program on more than 300 rental claims, it found errors in almost 9 out of 10 of the returns it reviewed. ATO 2024. 9 out of 10. And here's the uncomfortable part. Most of those owners weren't cheating. They simply trusted the system and got it wrong. This isn't a niche problem. Millions of Australians own investment properties, and the ATO estimates incorrect rental claims blow a $1.2 billion hole in the tax system every year. ATO 2024. Today I'm going to show you 3 moves to bulletproof your return, audit your deductions, reconcile your rent, and build a 5-year record trail. Each one is free, and each takes under 30 minutes. Let's land the big number. $1.2 billion a year, that's the estimated annual rental-related tax gap for individuals, ATO 2024. And here's the part nobody tells you. Incorrectly reported interest expenses alone make up 42% of that gap, ATO 2024. About $504 million a year just from people claiming loan interest they aren't entitled to. 3 moves. 1. Audit your repairs, capital works and interest. 2. Reconcile your gross rent and ownership shares. 3. Build a 5-year digital record trail. That's the whole plan. So how does it go wrong? Problem 1 is misclaimed deductions. The ATO and professional bodies point to 3 culprits. First, repairs versus capital works. Owners deduct a whole renovation in year 1 when it should be spread over time. Second, interest. People claim 100% of their loan interest even after redrawing money for a car or a holiday. And third, private use, like a holiday home, blocked out for the family but still fully claimed. These aren't grey areas to the ATO. They're the rules. Here's the impact in real terms. Say you spend $20,000 on a bathroom renovation and claim it all in year 1. Under the rules, that's capital works. Deductible at just 2.5% a year over 40 years. ATO 2024. So the correct deduction isn't $20,000 now, it's $500 a year. Get that wrong, and at a 37% marginal rate, you've underpaid over $7,000 in tax on that single claim. Problem 2 is sneakier, income and reporting errors. The ATO has flatly stated that the majority of owners make errors despite 86% using a registered tax agent, CPA Australia 2024. The classic mistakes: omitting short-term rental income from Airbnb or stays, and double claiming. That last one is brutal. Your agent takes their cut and expenses out of your rent, sends you the net amount, you report that net figure as your rent, and then claim the same expenses again. And here's why it now catches up with you. The ATO cross-checks your property against data from banks, land title offices, insurers, property managers, and platforms like Airbnb, ITP 2025. So if you understate income by $5,000 and overclaim expenses by $5,000, that's a $10,000 understatement. About $3,700 in tax a year at 37%. Run that for 4 years and you're looking at $14,800 before penalties and interest. Now the myth that stops people acting: my accountant handles it, so it must be right. But the ATO found that 86% of owners who got it wrong were using a registered tax agent, CPA Australia 2024. The agent isn't the one liable. You are. So check your own rental schedule line by line. Put the 2 costs side by side. Wrong interest claims drain about $504 million a year nationally, ATO 2024. And for a single mid-income landlord, the modelled 4-year bill, when tax, penalties and interest, can reach around $23,500, author's estimate. A national billion-dollar gap becomes a very personal 5-figure bill. Let me show you how this plays out. Meet Lisa, 38, a marketing manager in Sydney earning $110,000. She owns 1 investment unit she bought for $650,000 with a $520,000 interest-only loan, pulling $32,000 a year in rent. She uses a registered tax agent every single year. Here's what Lisa found. Discovery 1. Lisa spent $18,000 on a bathroom refresh and claimed the whole lot as a repair in year 1, author's scenario. But under ATO rules, that's capital works. Deductible at 2.5% or $450 a year, ATO 2024. She overclaimed $17,550. At her 37% rate, that's nearly $6,500 in underpaid tax from one renovation. Discovery 2, a different layer. 2 years ago, Lisa redrew $40,000 from her investment loan to buy a car, DC, but kept claiming 100% of her $26,000 in interest. Only the investment portion is deductible, ATO 2024. About $2,000 of interest a year was actually private. Over 2 years, that's $1,480 in underpaid tax. And Discovery 3, the most common one. Her property manager collects $32,000, keeps $4,000 in expenses, and sends Lisa $28,000. Lisa reported the $28,000 as rent, and then claimed the $4,000 again. That's an $8,000 understatement of income every year. ITP 2025. Over 3 years, $8,880 in underpaid tax. Add it up. Over 4 years, Lisa's underpaid tax comes to about $16,850. Apply a typical 25% shortfall penalty, roughly $4,200 plus around $2,500 in interest, and her total exposure is about $23,500. Author's estimate ATO penalty framework. 1 unit, 3 honest mistakes. So could this be you? 3 signs. 1. You've claimed a renovation as an instant repair deduction. 2. You don't actually know how much of your loan was redrawn for private use. 3. You've never checked your declared rent against your agent's statement. If even one of those rings true, do the 3 moves before you lodge again. 3 moves. Let's do them. And you can start every one of these tonight for free. Move 1. Audit your deductions. Log into MyGov, link the ATO, and open your rental schedule under Tax, Lodgements, Income Tax. Look at every large item: bathrooms, kitchens, appliances. Ask, is this a genuine repair or capital works claimed at 2.5% a year? And check whether your interest includes any private redraw. This is general information, not personal advice. 3 steps. Open your rental schedule in ATO online. Flag any renovation claimed instantly instead of as capital works. Then calculate your private versus investment loan split. What good looks like? Renovations sitting on the capital works line and interest correctly apportioned. Move 2. Reconcile your rent. Pull your property manager's annual statement and any Airbnb or stays dashboards. Add up the total gross rent received from every source, then compare it to the gross rent figure on your ATO schedule. If you own the property jointly, make sure each owner reports their legal share, not just one person claiming the lot. 3 steps. Total all gross rent received across every source. Match it to the gross rent line on your ATO schedule. And confirm co-owners each report their share, not 100%. What good looks like? Your declared gross rent equals your statement totals with nothing missing. Move 3. Build a record trail. The ATO requires you to keep rental records for at least 5 years. ITP 2025. Create one digital folder with subfolders for interest, repairs, capital works, borrowing costs, income statements, and private use evidence. This is the difference between a 5-minute query and a 5-figure bill. 3 steps. Create your folders: interest, repairs, capital works, income. Scan every receipt showing supplier, ABN, amount, and date exactly as the ATO requires. Then add a 1-page summary per year showing how each figure was calculated. What good looks like? 5 years of records, every claim traceable to a document. Why now? Look at the timeline. In 2023, the ATO ran over 300 random rental audits and found errors in 9 of 10 returns. DFV 2024. In 2024, it publicly named rental properties a top compliance priority and put tax agents on notice. ATO 2024. And in 2025, it's actively data matching banks, land titles, and short-term rental platforms. ITP 2025. The ATO can amend up to 4 years of returns. The window to quietly fix this is closing fast. After you act, verify it. You should see renovations sitting on the capital works line, not in repairs. Confirm your declared gross rent matches your statement totals exactly. And if you uncover a past error, lodge a voluntary amendment. Coming forward yourself usually reduces penalties significantly. Everything I've cited today, the ATO media releases, CPA Australia, and the compliance guides, is linked in the description below. Go read the fine print yourself. Today you learn the 3 rental errors the ATO hunts and exactly how to fix your own return. Next week, the negative gearing rules the ATO is quietly hoping you misunderstand. If this saved you from a nasty ATO letter, do one thing: subscribe. It's free, and it's the only way I keep reading the fine print so you don't have to.